So I built this tool called BioTerminal, and this is a research and learning terminal that's purpose-built for biotech and pharma stock analysis. Let's see how it actually works in practice. Coincidentally, a couple of days ago, my friend Oliver sent me an email asking me to look into a company called Intuitive Surgical because he's bullish on healthcare robotics. So we can see it's listed on NASDAQ as ISRG, and that they do robotic-assisted surgical systems, most notably the Da Vinci surgical robot. We can put that ticker into our terminal. We can see that instantly maps out, and we can also change the time period depending on your preference. Let's stick with 1 year for now. You also see that there's smooth moving averages and the standard stuff. Stock price is down 5%, market cap at 162 billion, with its revenue growth, which is very healthy for such size. You also see the gross margins, operating margins are at 66 and 30%, and anything above 65 and 25% respectively indicate that it's operating at a pharma level profitability for a hardware robotics company. This is pretty exceptional so far. However, the signal here points at a bearish thesis, which means it's technically weak right now. You can see that it's based upon technical indicators. But look up here, the AI confidence reading seems to contrast. Fundamentals and growth tell a different story. This is because they run two different models and therefore have two different output reads. And this is what makes me think that ISRG is worth looking a bit more into, and it makes it quite interesting. The confidence score is based upon these few factors, which seem to be broader in nature, and they also take into account technical factors. However, the weighting might be different as opposed to technical signal, as you can see on the right here. So here's a technical tab, technical analysis tab. And as someone who's quite new to learning finance and investing, I've also built it such that upon hovering of certain concepts, we can see what it is, why it matters, and what it does. And here for RSI, for example, anything between 30 and 70 are in a good range. So let's take a look at today's state, and it's at 45, which sits almost right in the middle of the two. So that seems to be a good indicator so far. I'll skip over these two just in the interest of time, and we can look at the DCF model. So this is where it might get a little uncomfortable, but it also sets apart this tool because typical things like Yahoo Finance, they don't have a stress test using DCF modeling. And we can see the current price is 457, yet the implied price is significantly lower at 138. But every assumption here is a slider, so we can try to gauge why this stock might seem to be significantly overvalued. For example, lowering WACC will significantly change its implied price. So we'll bring it down to 5%, 5.5%, immediately it jumps up closer to the current price. So this taught me that it's not about finding the right answer, but it's about understanding what has to be true for the current price today to make sense. You also have scenario analysis, and interesting thing here is that even in a pessimistic bear case, it has a very, very high price at 937. Even the pessimistic scenario seems to show an upside here. So why this might be different from DCF is that scenarios use revenue growth and multiple expansion, whereas DCF discounts actual cash flows, and they measure different things. We also run a Monte Carlo simulation, which yields a median of 1425. And this is a probability weighted central case, which is roughly 3 times from here over the full horizon. We have a pipeline which pulls in all the clinical trials that ISRG is currently undergoing, or it could be any other company, and also as an rNPV calculator. So this is a risk-adjusted net present value, which is particularly pertinent to drug pharmaceutical companies, and we can select different indications based off of the drug we might be thinking about, and what phase it's in to see its cash flow projection and sensitivity. We also have a prediction engine, and here it's quite bearish at a negative 8.3% expected to annualize, which again means it's technically weak right now, and there's other factors that takes into account to give the score. Notably, we also have a devil's advocate panel to see the main catalysts and risks to look out for. We can compare it with some peers, for example, Eli Lilly and Johnson & Johnson, and major headlines here, again with an aggregated sentiment to generate some sort of consensus. So now I can go back to Oliver and tell him my findings and what I think, along with some further research as to whether they have a differentiated moat and such. So I hope you enjoyed, and let me know if you have any feedback on things I can iterate and whether you'd like to try it out as well.